All right, everybody. Ladies and gentlemen, hello and welcome here to us at Nadex. My name is Philip and I will be once again your presenter for today's webinar. Today it's the market movers of 21st November 2017, and sure enough the S&P 500 is giving us something to talk about, but we don't just want to focus on the big index markets. Forex also has some nice trends going on right now, and yeah, we want to have a look at those markets moving there today. As usual, if you have a look at your webinar interface, you can see that small questions box, and I would now appreciate a very short yes or why in that box to just let me know that both the audio and the screencast are working properly. And if you do have any questions during the course of this webinar, please let me know. And yeah, I do my very best to answer those questions as we move through the webinar. Today's session is scheduled to run for about half an hour, and of course before we get started you guys can already see our risk disclaimers, so please take a moment of your time to read through them, make sure you're okay with them, and yeah, then we can really just kick it off. Essentially, this says that trading of course involves risk, and that you should understand those risks and the risk associated with the instruments you're using before you are getting active in the market. As neither Traders Position nor myself are investment advisors, nothing that we say should therefore be considered to be actual investment advice. All examples are shown for educational purpose only. Especially true for the live part of today's webinar. We will be looking at the markets together. I will be telling you what kind of trade setups I will be looking for, but those are just my setups. You must understand what you're doing there. You must own those setups. You have worked very hard for your money, so it just doesn't make sense to blindly follow along and do what I'm telling here. You must own that trade. It must be your trade. You must understand why you took that trade, and you must feel really comfortable about that trade. So please make sure you understand that this is really there just for educational purpose. Now, let's have a look at the risk warning from Nadex. Trading on Nadex involves financial risk and may not be appropriate for all investors. The information presented here is for information and educational purposes only and should not be considered an offer or solicitation to buy or sell any financial instrument on Nadex or elsewhere. Any trading decisions that you make are solely your responsibility. Past performance is not indicated for future results. Nadex instruments include forex, stock indexes, commodity futures, and economic events. Nadex binary options and spreads can be volatile, and investors risk losing their investment on any given transaction. However, the limited risk nature of Nadex contracts ensures investors cannot lose more than the cost to enter the transaction. Nadex is subject to US regulatory oversight by the CFTC. That being said, let's have a look at today's agenda. Our regular attendees know it now by heart. We want to have a look at the markets, but we don't just want to look at those charts and think something might be there. We want to approach those markets and those charts with a strategy in mind. We want to understand what we're looking for. We want to identify our trade setups. If those setups aren't there yet, we switch to different markets, or we start to stalk those setups, those markets. Stalking in this context really just means I know something is there, but we are not quite there yet. I have that perfect picture in my head, what I'm looking for in a setup. And if I get it, I place a trade. If I don't get it, I just wait. Waiting usually makes the most money. Sounds funny, but a huge performance killer actually is overtrading, which means you just want to place trades and want to be trading at any cost because now you have time, now you want to be trading. Guess what? If the setup isn't there, it just doesn't make sense. Actually, if you take setups which aren't that good, if you place bad trades, this will be one of the worst performance killers that you can have in your portfolio strategies. Yeah, without much further ado, let's just have a look at the live markets. And the first market that I want to share with you guys today is the Australian dollar against the Japanese yen. With currency pairs, it's usually such a thing that those prices, of course, fluctuate. Now, however, from time to time, if one currency is especially weak and another currency is especially strong, the combination of those two currencies usually tends to form some very nice and strong trending moves and moves in the market and trends that can be traded. And currently we do have that setup here in the Australian dollar against the Japanese yen. Currently, the Japanese yen is pretty strong against a lot of different other currencies, of the major pairs at least. And the Australian dollar currently is rather weak against all those other currencies. Now, if you combine those two and have a look at the Australian dollar against the Japanese yen, sure enough, we can see that the price and market here is starting in a very fresh and nice downtrend. And how do I know it's a downtrend? Well, I just have a look at my highs. I have a look at my lows, and I can see the market has been making lower highs and is now making lower lows again. And price is now just pulling back, has started to pull back here towards our moving average buy zone. That's the area between the, the moving average sell zone, of course, in a downtrend, which is the area between the 10 and 20 period moving average. Price is now pulling back. It has been overextended here at those levels, and now has started to pull back. I see that this move to the downside has been going on for some time. By just looking at my 50, 20, and 10 period moving average, they are in the correct order for a downtrend. Here, they have been in the correct order for an uptrend, higher highs, higher lows. And I see once again here my fanning pattern. Those moving averages are well separated, and I get the same pattern here again, but this time to the downside. I don't just want to enter this market move to the downside because I see it's a downtrend. I want to have a good deal. I want to have a fair trade location, which gives me, again, a little bit more of an advantage when I enter my trade. If I was entering that position here, I think we are quite overextended from those price equilibrium levels. It's too expensive to negotiate that deal at that price level. I want to have a better deal. And I use my 10 and 20 period moving average sell zone in this context to help me to identify this area of a potential good trade location, of this good deal. And so the big plan here is I want to wait until price pulls back here towards my moving average sell zone. And I have already identified some levels here on this chart. And if I get a setup involving one of those levels, this would make the deal ever so sweeter. Let's have a look and zoom out a little bit. And here we start to easily see that those levels have been in the market for quite some time, going back to 2015 and even further back in time. You can see the market has reacted to those price levels here several times. And sure enough, I think if price is now pulling back, I think it's rather likely that price is now pulling back towards those levels again. This one here is too far away for me, but I think a retest of this level in this area here might be rather likely. I don't know for sure. Nobody knows for sure. The only thing that I do know is that if I wait for a pullback and initiate a trade in trend continuation direction for further short, or initiate a potential short position, I know that this has a potentially higher probability of working out than trading now the counter trend trade and trading the pullback. However, with this level here, I think this pullback is likely to happen. Would I trade it here on the daily chart? No, I wouldn't. For that, I would start to drop down with my time frames. That's the daily chart. Let's have a look at the 4-hour chart. We see the pullback here is already on the way. We could easily start to already call this here at the beginning of a new uptrend. We start to see higher highs. We got a pullback. We see a higher low. The moving averages aren't there in order yet to actually trade this as an uptrend. We have to drop down even further with our time frames. Looking at the hourly chart, we start to see this fanning pattern now towards the upside. Price is going higher. Still, I do not get the structure that I'm looking for. So why not have a look at the 15-minute chart? And on this 15-minute chart, we start to see the price is now testing this level here of 85.30 roundabout. We can actually just pick our level tool and put this level in here, and you start to see the price has been testing this level here 1 time, 2 times, and a 3rd time. The question is, do I think that a breakout here is likely and that this breakout will happen and will happen with force and will be strong? I have doubts. That's not a tradable setup for me, because if you have a look and see that price is testing this level a 2nd time and a 3rd time, what I want to see, if price is about to break out here to the upside, that I am able to get convergence on the breakout using my indicators MACD and RSI. And this convergence means as price is about to make a new higher high here, I want to see that MACD is also able to make a new higher high, as is RSI. And that's just not the case here. Let's just have a look here. I can see that I want to see a new higher high here in price. But if I compare what price has been doing here, or what MACD has been doing here, and what RSI has been doing here as well, you can see if price makes a new higher high, the connecting line would be something, hopefully, like that. What I'm seeing here in MACD, however, is that this line is just going in the opposite direction. This line is rising, those two lines here are falling. That's an early warning sign that this move to the upside might not be as strong as I'm hoping for, as I'm expecting here, and this is why I would be definitely reluctant to actually trade this market here, at least on the 15-minute chart. Let's have a look at the 30-minute chart, and sure enough, it's not as pronounced here, that pullback, but still it's diverging. My big game plan here for the Australian dollar against the Japanese yen actually would really be to wait for this pullback to happen on the daily chart, on the 8-hour chart. And once I get this potential setup here around this 85-70 level, then I might be inclined to initiate a potential short position. Let's have a brief look here at the Nadex plot. And let me just quickly jump back here to the 15-minute chart. All right, if you think, however, that market might be breaking out, let's just have a look here at the forex binaries, Australian dollar against the Japanese yen. And let's have a look here at the 3 a.m. expiry cycle. And this trade now would have 14 hours and 48 minutes left. So much time is left in the life cycle of that option. And if I think price is likely to break out here and will be trading above this price level, then a potential trade that I might consider would be a potential long position here. What's my price level? 85.31. So I'm looking here at 85. Let's go for 85.40 in this example. And I could be looking here at potentially buying this contract here. Now, the question often is, how many contracts should I buy? We're trading here from a demo account, which has round about now $22,000. And the idea for my own trading always is I want to risk 1% of my account on any one given trade, which means if this trade doesn't work out, I want to lose, in that example here, $220. 1% of my account, if that trade goes wrong, I won't like that result, but it won't kill me. Staying small, staying consistent with my risk exposure is one of the crucial aspects of actually making it in the market and enabling yourself to survive long enough to actually get the experience to become a successful trader in the long run. So how many of those contracts might I be buying right now? So I'm just increasing the size that I have here because great feature about those Nadex contracts in the platform, I see my maximum loss here immediately on that deal ticket. I can see that if I traded one contract, all I can lose is what I'm paying for this contract. For one contract, this would be 35.75. What is the proper position size? Well, I just keep on increasing my position size until that number is quite close to 220. And this would be, I could now be trading 6 contracts to stay in line with my position sizing, to risk only 1% of my account on that trade. So I could trade now with that setup potentially 6 contracts for potential long trade here. When would this be a potentially winning position, a potentially profitable position? Well, when this contract expires, which is in 14 hours and 46 minutes, if that contract, if Australian dollar against the Japanese yen is trading above 85.40, then this contract will settle for $100. I'm trading 6 contracts. I'm paying now $214.50. My maximum profit would then be $385.50. a reward to risk ratio on that trade, which is larger than 1, which is always what I like to go for. It doesn't make sense for me to risk $100 in order to be able to make $50. I want to have at least the opportunity to make as much as I'm risking if the trade goes my way. So that could be one trade here that you could be considering if you think, I'm not convinced about this divergence setting up, price might be shooting higher. Another trade, if you think that this divergence is too pronounced and the overall picture is still pretty bearish for the Aussie, you might then be looking at, let's have a look at different expiry cycles here. You could be looking, for example, at this contract here, and with this expiry cycle, you just have 2 hours and 45 minutes left. And if you think price will stay below this level here, will stay below this level of 85.31, we would be looking at this contract here, for example, 85.20, and we could be selling this contract if you thought price will stay below or will drop below this level and settle below this price level of 85.20 within or after 2 hours and 44 minutes. The basic idea is the same thing. How many contracts can I sell? Well, I'm just going for a size of 1. I can see now my maximum loss would be $26.50. My maximum profit would be $73.50. I'm selling this contract right now, and the idea is price drops and that contract will settle for 0. So I will be able to keep what I'm selling this contract for right now. Obviously, only if price drops. We never know for sure. And quite frankly, here with this market on that time frame here, I wouldn't be trading. It's just for demonstrational purpose, on top of just being for educational purposes. The setup I'm waiting for is I want to see a short setup happening here around this area. Doesn't happen now, will happen within the next few days maybe. That's what I'm stalking, that's what I'm looking for. Now, coming back to this exercise here, selling one contract gives me a maximum loss of $26.50. I increase that number once again, and you see I could be selling now 8 contracts for a maximum loss of $212. My maximum potential profit would be $588. Again, very nice reward to risk ratio. However, price has to drop by quite a bit. 85.20, this is here at this level, and you can see price has to drop below this level within, or not within, at 2 hours and 43 minutes. It has to close below this level. Only then will this contract expire worthless, and I will be able to keep and realize my maximum profit. All right, this is how I could use my analysis in order to trade those markets. And let me just quickly jump back here to those charts. Are there any questions so far? Anything that you want me to explain? Anything on the analysis where you say, I didn't get that one? I like those sessions to be interactive. So if you guys have any questions, please make sure to let me know, and I'm more than happy to answer your questions here. All right, so let's come back here to the daily chart. And you can see how important it is to actually put those levels on your chart, and price reacts to those levels. If I could go back in time and take just one thing from what I know right now about trading and go back 10 years in time, I would teach myself, Philip, pay attention to those levels. And how do I put those levels on the chart? Actually, it's quite easy. I'm just picking my line, and now I'm just moving that line around. And you can see price has reacted to this price level here and there, and that's pretty much it. It's not some kind of fancy algorithm or whatsoever. I'm just moving the line around and try to identify, okay, where did I see price reacting to this level? We got reactions here and there and here overall and here once again and here as well. You just put those lines on the chart there as well. The idea is that I don't want to take any specific position in the market if I see that price is just trading against one of those levels. So would I now initiate a long position here? No, because I know this level is here just waiting for me to hit that brick wall and stall movement right there. Would I be happy to initiate a short position here? That level is a little bit close. But if we get the pullback here to this area and then are able to initiate a short position, depending on the size of that candle, I have probably enough room for price to actually move in my favor to give me a decent reward to risk ratio on that trade. Rule of thumb for my trading is if I get a setup, I want price to be able to move in my direction at least for a 3-to-1 reward to risk ratio without hitting any major support or resistance levels. I hope that makes sense. Now, next thing, I want to have a brief look at oil. And here you can see what I've been talking about. Price has been pushing higher. Price has pulled back. Where did price pull back to? It's a daily chart on crude oil, WTI. We got a small bullish candle setting up here right in the buy zone. That was a perfect trade setup. I really liked that setup. Small bullish candle. And if we traded this according to our rules, and let me just get this one here. There would have been my traditional stop loss. There would have been my entry just above the high of that candle. And my first profit target would have been the same distance between my entry and my stop loss and the 1-to-1 reward to risk ratio. You see that trade would already have hit that that first profit target. Keep in mind, with those Nadex contracts, you don't have to have stop losses, because your risk is well defined when you open that position. You've seen the example that we just did. I know exactly what is my maximum loss if that trade doesn't work out. I know that when I open the position. I can't have any slippage. I don't have any nasty risks or surprises, the market gapping against me, stuff like that. You have a well-defined risk position here with Nadex contracts. And so that stop loss level wouldn't be that interesting. But of course, you can manage your position. You can easily trade and close that position. Let's just assume you entered here, price is going against you, but your option still has some time left. It will expire in the next day. Even though it was out of the money at that stage, it would still be worth something because it has time value. You could still be closing that position here and even further minimize the potential loss that you would have occurred there if that option was about to expire. So you can actively manage your position, and so having those stop loss levels on your mind, on your map, definitely is also a nice tool in your workbench. All right, so that's the setup that I'm looking for. Price has been pushing higher. So much for oil here. Now, the question is this move in oil already over? And if we zoom out a little bit, you can see oil has been in that range here for pretty much a very long time. And we can also establish this other range and level pretty much here in this area, something like that. You see price came back to test this level. And sure enough, we have been here in that range. Now, question is, will the momentum continue? Will price go higher? Nobody knows. I don't know as well. But currently, I think it might be a little bit, I still see some good momentum going on here. Price made a new higher high here. And sure enough, this was a clear new higher high also in MACD and RSI. We got convergence here on this move higher. It really depends on how much momentum we will get now. And if price continues to make a new higher high here, there might be some kind of divergence setting up here in this recent price movement. Overall picture here, I think, is still pretty bullish. This pullback was well timed. It didn't take too long. It could have been a little bit faster and steeper, but overall picture here is still okay. One thing to definitely keep in mind, however, when it comes to oil, OPEC will be meeting next week, I think. And those fundamental news, those meetings always trigger news. They will be discussing again if they will cut their production rates in order to send prices higher. Currently, it seems that they will get a consensus in that way. Very dangerous to trade around those news events with traditional instruments, because price can easily send, those news can send price spiking higher or lower, huge volatility spikes. with CFDs, with futures, it can be a lot of pain. However, you have well-defined risk positions here with Nadex contracts. And so if I want to trade those news events, like the OPEC meeting next week, Nadex contracts are definitely one of the most suitable instruments, again, to keep in mind what you have there with your well-defined risk position. Thomas is asking, could you please repeat the values of those 4 moving averages? No problem, you're absolutely welcome. We're looking here at a 10-period moving average, a 20-period, 50, and 200-period moving average. I'm using exponential moving averages here. It doesn't matter, you pick whatever you like. If you're going for a simple or exponential one, doesn't matter. The one thing that I'm using those moving averages for 2 things. I don't care if they cross each other. What I want to see is this fanning pattern, which I only get if I have a strong trend. The next thing is I'm using those moving averages here to identify good deal locations, price equilibrium levels. Here, I wouldn't have wanted to enter that trade because price has been overextended. Now it has pulled back, it's catching its breath, it's gaining strength again for another next move higher. And this is my good deal location, price equilibrium levels, and this is what I'm using the 10 and 20 period moving average for. All right, guys, so much for oil, and yeah, let's have a look at the S&P 500. All-time highs, testing 2,600 level, both in the SPX, which is the cash index, also on the S&P 500 futures. Yeah, my assessment from last week really hasn't changed. I see a lot of weakness here. I still see a lot of nervosity and people being nervous here. I see strong divergence setting up here. However, price is currently making new higher highs. And yeah, I still have my fanning pattern in my moving averages. You see the buy zone was closing down pretty not fast, but pretty continuously, let's put it that way. However, today, bullish candle, and we're hitting this 2,600 level. And those levels are always rather interesting because big round numbers. Another example of those big round numbers would have been, for example, back in the day, 10,000 points in the Dow, or the German stock index, the DAX, also 10,000 points, now currently battling around the 13,000 points level. Big round numbers. With the Dow, it was all, with the S&P, it was also for a time 2,500, now 2,600 seems to be a little bit more of an issue here. Yeah. Am I bullish for this market? Not really. There are far too many warning signs for me. However, as long as they keep on buying it, prices will go higher. So with this market, I would pretty much probably stay on the sidelines. I have a hard time to really take a position here in that market. And if you think about it, the nice thing about those markets available for trading here at Nadex, especially with forex, with those commodity markets, those markets are not really that strongly correlated with what the index markets are doing. So if this market is shooting higher, it's going sideways and nothing is happening, or is slowly but steadily falling apart. You have an uncorrelated market with forex and the Australian dollar against the Japanese yen. Sure enough, it will be influenced by what the global economy is doing. But the correlation between what the index markets are doing should be rather limited. So keep that in mind. Have a look at different markets. Don't only trade the same markets, and just because you are from the United States, don't think you have to trade the S&P 500 and that's it. Many different markets available for your trading. I want to find the best markets, the strongest markets, and you see there are a lot of warning signs here. Compare this with what we're seeing here on the Australian dollar, Japanese yen. Much cleaner chart structure here, much more confirmation and confidence in the strength of this market movement. And for that reason, if I have to pick one of those two markets which I want to trade right now, it's definitely the Australian dollar against the Japanese yen. Just reading a question. Thomas is asking about the moving averages and would it be advisable to go without Bollinger Bands? Bollinger Bands are giving you different information. Bollinger Bands are giving you a measure of volatility. You also have volatility around the chart itself by just looking at those candle sizes. Bollinger Bands help you to identify areas where price has been moving fast for some time and where price is actually hitting those upper and lower Bollinger Bands. I'm pretty sure in this area here, those Bollinger Bands should have gone flat. And now we would have touched, and here those Bollinger Bands would have started to expand. You pick what you like best. Those tools that we're using here are part of our core strategies. In the end, all those indicators can be completely erased from your charts, or you want to focus on just reading price action. Because if you think about it, Bollinger Bands, moving averages, MACD RSI, the only thing that goes into the calculation of those indicators price. So the only thing that those indicators can show you is certain aspects of price behavior, but all the information already is in price itself. So by just reading price action and focusing on what price is telling you, you don't need those indicators. So why do I have them on my chart? Because I can read the charts and the markets way faster and way more efficiently, but I don't need them. I'm pretty sure I would arrive at the same assessment of those markets and same conclusion, just a little bit slower if those indicators weren't there on my chart. I hope that answer also makes sense. But thanks again for the question, Thomas. All right, guys, time's already pretty much up, so let me just quickly jump back here to the last and final slide. I hope you enjoyed today's webinar, and you enjoyed the analysis, learned something new, found it useful. Sign up for a Nadex account, or at least for a demo account. And here we're saying we have 14-day demo accounts available. That's not true. The good news is those demo accounts are unlimited. So if you haven't done so already, please consider signing up for one of those demo accounts. Demo paper trading will never prepare you for the real markets, but what it will help you to do is to learn the platform, understand how to handle the platform, how to initiate positions, how to scale in and out of those positions. And once you've got that down, you can really focus on reading the charts and actually trading the markets. And for that hands-on experience using the platform, I highly suggest that you use that demo account. You have different ways here to be in touch with Nadex in case that there are any further questions. And yeah, so for me, from my side, that's pretty much it for today. Thanks again for tuning in today. If you have any feedback for us, it would be really appreciated to learn about your feedback in the survey after this session. And now for the rest of the day and the week, happy trading. Of course, enjoy your Thanksgiving turkey. And looking forward to talking to you guys again pretty soon. So thanks again for tuning in. Happy trading. Take care. Thanks again and bye-bye.